One of the things that's really important to me in this channel is transparency. Once a month, we go through my portfolio for the previous month and look at all the transactions, purchases, sales, dividends. We'll even flow through my portfolio so you can see what holdings I have. That's important for me because I want you to know that what I'm sharing with you here is what I'm actually using for my portfolio. And I don't share it with you so you can mimic it, so you can copy what I do. I share it with you just so that you can learn what someone else is doing, and maybe you learn something that you can apply to what you're doing, or you know what, maybe you learn something that you don't want to do. And so either way is fine with me as long as it's helpful to you. In addition, today I'm going to share with you a new portfolio I'm starting. I'm really excited about that, and I can't wait to share it with you. So if you're interested in hearing the update for June in the portfolio, as well as this new portfolio I'm starting, stay tuned. Hey guys, Kevin Burgess back again with another video. And you've probably noticed that this is not my normal setup. We have come to the beach to celebrate the 4th of July. So we have all the kids here. It is really difficult to find a place to actually film a video. But where there's a will, there's a way. And today we're going to look at June's transactions in the portfolio. I'll go through the purchases and sales as well as the dividends that I received in the month of June. And it was a great month for dividends. Then also we're going to look at the portfolio. I'll pull it up on Simply Safe Dividends and we'll just kind of scroll through that. Then I want to share with you something I'm really excited about. It's a new portfolio that I'm starting. I can't wait to give you the details on that. I'm going to do that after I give you the update to the portfolio. So without further ado, let's get started. So let's start by taking a look at the performance of the portfolio over the last week. This is week ending July 1st. You can see that the portfolio went up just a hair this week, but it was really related to the money that I moved in, $7,300 on Friday, July the 1st. We got $601.82 in dividends, and we had a market change that went down by $7,000, which is roughly 0.8% of the portfolio. The S&P 500 for the week went down 2.2%. So we were able to outperform the S&P 500 last week by 1.4%. On a year-to-date basis, you can see that we've received $13,283.85 in dividends. We've made $450 or so in options transactions. I've put about $106,000 into the portfolio, but the portfolio itself has gone down by $42,353 or 5.2%. As you know, we're in a bear market and the S&P 500 is down year to date by 20.2%. The portfolio is down 5.2%. While we don't like to see the portfolio go down, I am really pleased that we're outperforming the S&P 500 by 15 percentage points. So if you want to see the magnitude of that on my portfolio, take the $835,000 portfolio times 15%. You get somewhere in the $120,000 to $130,000 range. So if I was performing equal to the S&P 500, my portfolio would be probably somewhere around $710,000. So that's really the way to think about this. So we're outperforming the market. Even though we've lost a bit of money year to date, we are doing much better than the market, and I'm excited about that. So let's move on to purchases and sales. And for those of you who may be new to the channel, I have two accounts. One, it focuses on yield, and that yield is what I will use if needed to help cover my expenses. And then I also have a growth account, which is a dividend growth account, not a growth stock account. So I'm looking for companies who are growing their dividend really quickly and over the long term will be great investments for me. So those two portfolios I split up here, and I'm going to talk about the third portfolio I'm going to start in a little bit. So you see the first purchase I made is on June 13th, ticker symbol MO, which is Altria. That's my first purchase of Altria. And later that week, it was just a few days later, the government banned the sale of Juul, and so the stock went down probably 10% or so. And I ended up on the 22nd buying 50 more shares to average my cost down on that. So I now own 100 shares of Altria, and I'm getting probably an average yield on that of, I don't remember exactly what, we'll see it later, but it's above 8%. So that's really good for my yield account, and it's not a big part of my portfolio, so not a huge amount of risk that I'm taking on there. Main Street Capital, I bought 100 shares of that, and I got a really good yield also on that. So being selective about my purchases at this point. And moving on then to the growth account, I bought 100 shares of Best Buy on June the 7th, and I bought 100 shares of Stanley Black & Decker on June the 10th. In terms of sales, I didn't sell any shares this month. I like the shares that I have, and so therefore I'm not willing to sell them at a discount, and that's basically the way I look at it. I will plan to make some additional purchases in the future in order to average down my cost, but at this point I'm not really selling anything, and you can see that in this slide. Now let's go through the dividends. What a month for dividends, $4,312 in total. Let's look at the high yield account. On June the 1st, I got a dividend $306 from Pinnacle West. Then June the 10th, I got dividends from Chevron of $241.40 and IBM at $330. On the 15th, I got two more. One is from Main Street Capital for $172, and then Whirlpool at $87.50. On the 16th, then Prudential came in at $300. Then the last day of the month, I got $44 from Fidelity National Financial, and again, another dividend from Main Street Capital of $67.50. So moving on to the growth account, on June the 1st, I got a dividend of $162.47 from Aflac. On the 2nd, I got a dividend from Cummins, $585.43. Cummins is my largest holding in the portfolio. Then on the 6th, Atmos Energy was $137.31. Johnson & Johnson came in on June the 7th at $237.81. Then Microsoft at $93.36 on the 9th. Then in the middle of the month, I got two on the 15th in this account. Stepan Company, which is a small holding that I have, is $33.71. And then Whirlpool, again, in this account, is $530.76. So you can see I own Whirlpool in both of these portfolios. Because the dividend yield is so high now on Whirlpool and Best Buy, those investments really fit in both accounts, and so I've been buying it in both accounts. Then on the 21st, I have Stanley Black & Decker, $158.58. Lockheed Martin came in at $370.11. EOG Resources, $371.97. And Pepsi, $82.10. So the total in the growth account for the month of June was $2,763.61. The total in the yield account was $1,548.40. So in total, we got $4,312.01 in dividends for the month of June. I also like to update you on what the cash balance is in my portfolio. You can see here that in the yield account, I have $9,592. This is as of June 30th. In cash, this is about 3.3% of the portfolio. And then on the growth account, I have $32,903. That is about 6.1% of that portfolio. So in total, I have $42,495, which is roughly 5% of my portfolio. So another way to think about that is I am 95% invested, and I have 5% in cash waiting to take advantage of deals that I find in the market during this bear market. So I'm excited to tell you about this new portfolio I'm starting. So my portfolios are structured where I have a dividend yield portfolio, and that yield portfolio seeks current income that I would use then to supplement the income that I have. It's a passive income approach for me. Secondly, I have a dividend growth portfolio that are funds that I'm not going to need for a while. So it's really the dividend growth portfolio, if you want to think about it as more like a medium term length of time, whereas the dividend yield portfolio is a current income portfolio. There's really a piece missing here, and I think it would be helpful for you guys for me to start a third portfolio. And let me walk through the details of that. So the third portfolio I'm going to call the Dividend Snowball portfolio. And I want to put this together in a way that mimics how someone maybe who's just getting started would actually build their portfolio and work through dollar cost averaging to build their portfolio little by little over time and see how that dividend snowball actually works. So I started the portfolio with $2,500. So that's the initial investment. $2,500. Then I'm going to contribute on a weekly basis $50 into this account. And so there's some goals around the account, but the main ones are diversification. I want to be able to be diversified in this account. I also want to have consistent dividend growth. I want to take advantage of dollar cost averaging. And I want to use this account to show folks how you can learn to invest. And learning to invest involves research. It involves understanding the psychology of your actions and how your body wants to do certain things, but those are really counterintuitive to what really should be going on in the portfolio. So what's the approach? I took 80% of these funds and put it into an SCHD ETF. An ETF is an exchange-traded fund. SCHD stands for Schwab U.S. Dividend Equity. So why am I starting with SCHD? I mean, I could have picked one of several ETFs, but my main purpose here is to get diversification in the portfolio. And what do I mean by that? If I go then to look at the holdings, these are the top 25 holdings in the account, but you can see, I've got 4% in Merck, 4% IBM, 4% Amgen, 4% Coca-Cola, 4% Pepsi, 4% Verizon, 4% Cisco, and the list goes on and on. So the value of SCHD is that it gives me the ability with a small amount in the portfolio to get a really good amount of diversification. And that gives me some freedom then to take some of my portfolio and pick individual stocks with that. And looking quickly in Simply Safe Dividends, you can see the dividend yield for SCHD is 3.36%. That means that the money that I've put in there, at least currently, will get 3.36% in dividend yield, and it's got about an 11% dividend growth rate, which is pretty fast. So this gives me the ability to diversify as well as get some good dividend growth and good dividend yield. So then I want to take 20% and put that into individual stocks. So I have already bought the SCHD, but I am looking to buy 2 to 3 individual stocks, and I'd like to get your feedback on this. So I've got a list here of stocks that I think would be really cool for someone just starting out to buy. So Apple, Microsoft, Google, Best Buy, Lowe's, Visa, Nike, Target, Starbucks. So I want to invest in maybe 2 or 3 of those. So I would ask you in the comments below if you can give me what you think. Maybe your top 1 or maybe the top 2 of those. Or if there's something that's not on this list that you think would be really cool, let me know what that is in the comments below as well. And by the next video, I will have selected what those 2 to 3 stocks are, and then I'm going to take the rest of the portfolio, which is $500, and split that between those 2 to 3 stocks, and then continuously dollar cost average into those 2 to 3 stocks. I might switch that from time to time if there's like really good deals out there, but overall, that's the direction that we're going to go, and we're going to learn how to invest in individual stocks while staying diversified with a smaller portfolio. So that's the update for today, guys. Have a great 4th of July. You know, I've been studying Intel pretty hard, INTC. I think that's going to be my next video, so I'm looking forward to updating you guys on my thoughts around Intel. So with that being said, I will see you on the next video.